All right, we are live. Welcome back to Stock Tricks with Nick. If you guys are new here, this is a live stream that I do on Friday nights after the market's closed. We also have a Wednesday midweek check-in. We call it midweek movers of stocks that I'm currently trading, what's on my watch list that can still take off in the second half of the week. Kind of taking another step back from there, this is a stock trading live stream, stock trading YouTube channel where you'll always get a lot of people just showing all of their winners, but I pull the curtain back and you get to see all of the losers, any mistakes that I make. We do share a lot of the winning trades as well, but if you're not prepared to take losses correctly when they happen, and they do happen no matter what strategy that you're trading with, you won't be prepared. So this channel's made not only for the people looking for the patterns that stocks make just before they break out, but also how to protect your downside risk and really look at things from a risk-first perspective. So when I enter a trade, it's always how much can I lose on this trade instead of how much can I win. And by doing that, I never go broke. So up here, I have the agenda for the day. So we're going to go over kind of how the week played out. And I know with Thursday and Friday being pretty mellow, no big news, we might have forgotten what we entered this week thinking. So go over Trump's COVID and his tweet. So a little Trump volatility in the market. I got asked on StockTwits how do I use Bollinger Bands, so we'll be going over a little bit of that. I finally put together my September trading analysis. So one thing that I've found has really helped me go from basically like losing consistently to making money consistently is analyzing my trades. So going back and after the emotions, after the money's all set in, going through the trades, seeing, was this a good entry? Did I start scaling out at the right time? Should I have held this longer? And that's typically the main mistake that I've made. So I'll show you basically a summary of my September trading statistics and how I use my trading stats to help me scale out of trades when they're working for me, and kind of putting together my risk reward on a single trade, because you never want to take a trade if your risk reward is 1-to-1. So we'll go over that. I meant to do that last week, but because September was so volatile, we got the peak in the market and a lot of strong pullbacks and shakes there. I had a lot of trades to go over, so it took an extra week there, but have it for this week. Outside of that, we have technical analysis. We'll start off with what I got on StockTwits and Twitter, and then we'll roll through some of the positions that I'm holding right now and wrap it up with what's on my watch list for the upcoming week, and then whatever else we get in the live stream's comment section. So as always, use that comment section for any questions, whether it be like, hey, Nick, you mentioned this type of moving average. Why do you use that moving average? Any type of questions, leave it in the live stream comment section. And if you're watching this after the live stream, drop it in the comment section of the video, and I'll get to those. If you have a stock that you want me to review after the live stream and you're watching this the next day, use that comment section. I'll drop a comment of what I think about that stock. So with that said, if you find value in this live stream, please subscribe and like, comment, all that good stuff. Really helps out the channel grow. We've been growing dramatically over the past couple weeks. We've doubled subscribers, and we're close to that magic number of 1,000 subs. So really trying to get there by my birthday in a couple weeks, so 2 weeks to go. I think we can make it happen. We're growing pretty quick. So do all that good stuff. Follow me on StockTwits. Follow me on Twitter. Post basically daily on those two. And with that, let's go into the charts. All right, so let's just jump into the S&P 500. So starting this weekend, if you don't remember, we left off on Friday with Trump getting COVID. He got it Thursday night, or is announced Thursday night. So Friday, let's see, Friday, Thursday, Wednesday, Tuesday, Monday, Friday. So here we go. This is that Friday. This is where we ended off. We zoom in there, and let me switch this over so you can actually understand what I'm showing on the chart. We got the Bollinger Bands right here. That's 2 standard deviations away from these 20-day simple moving average, the green line here. Got your 50-day simple moving average, the red line. The 8-day exponential moving average, and I'll get to why I use that in a little bit. And the 200-day simple moving average. So have a bunch of different of the kind of main moving averages that people look at. And then we have volume down here with the 50-day volume average, just to see if a spike is also correlating with a spike in volume. You know that's going to be a strong breakout. So we want to look at volume and price to paint the picture for our technical analysis chart. Below that, we have the price relativity compared to QQQ. That's the NASDAQ 100. We always want to be buying stocks that are showing the most relative strength, not stocks that have just dropped or are in a downtrend. We want strong stocks in an uptrend, maybe just pulling back to a moving average, finding some support, ideally on low volume, and those are the ones that we're trying to buy before they break out again. So that being said, you guys know the chart now. This is where we left off on Friday. Over the weekend, it seemed like Trump was doing worse and worse, but sure enough, on Sunday, I think he tweeted out, like, he kept on putting these cryptic messages like, I feel fine, I think, and stuff like that. And then Sunday said that he'd be back in the White House on Monday. So figured we'd get a pop, but I was, I want to say 70-ish% hedged with a QQQ short on all my long positions because you never knew. Like, you never know what's going on with the market or with that type of news. So didn't hit the home run that anyone who wasn't hedged hit on Monday with the news that he was back in the office. But, I mean, I'll take that as my insurance policy. As an actuary, I'm fine paying a little bit of a premium for some risk control. So Monday we moved up, and low of the day open was the opening price, moved up, but on really low volume. So I'm like kind of concerned about that. I shed some of my QQQ short, but not everything. And then Tuesday, I was having, I want to say my best trading day. I had a lot of stocks breaking out, and just a lot of my positions were strong, up 4 or 5%, whatever. So my overall portfolio was having the single strongest day since I started really tracking this in, I think, June. Yeah, June. Finally feeling good about everything, and Trump tweeted out that no more stimulus talk. We're pulling this until after the election, and you can see the markets overall were already down. We had a lot of growth stocks breaking out, so I was starting to press with my positions. Took off some hedges. Was really going there, but with that tweet, everything pulled back a little. I went from being up like, what was it? I was up like 1,400, and then I was down 400, and ended the day flat or plus 50, something like that. So, I mean, that's just the frustrating part of the game. With that tweet, I wouldn't say I panic sold, but I was using margin at the time, so I just scaled back some of my positions that didn't hold up as well during that downtrend or pullback. So when the tweet went out, I started looking which of my stocks are coming back the quickest. Anything that wasn't coming back as quick, I just cut some position size on. The only one I completely cut was one that was already near my stop loss, and that ended up going lower. So that was fine. But the next day, we get a little bit softer news on that. Market starts heading back up. I look like a fool for cutting my positions and keeping my hedge. And then at the end of Wednesday, I took my hedge off, and you see this clear uptrend. Still really light volume, which is a little bit concerning. So if you're trading some of the bigger name stocks, maybe a little bit cause for concern on that. You would have loved to see like big volume come back through as we're pushing back towards all-time highs, but a lot of the growth stocks are volume's fine, price is fine. So where I'm at right now, I have a very, very small hedge, maybe like a 2 to 5% hedge with QQQ short, but I'm leveraged into some positions, and so far they're all acting well, and we'll go over those positions in a little bit. But that's SPY. This is QQQ. Very similar story. Let me take off those flags just so it makes it a little bit clearer. And if you kind of zoom out here, you see an inverse head and shoulders right here. So that's a sign of strength. You are starting to see the, what would that be, inverted right shoulder, whatever. So now we're looking, one too many, to go up from here, because it came in, made a lower low, but then made a higher low, and is now breaking over this previous resistance here, and it's now above all the moving averages that I track. So at this point, market looks good, growth stocks look good. Are we going to get some news going into the election? Absolutely. I probably should start scaling back position sizes or just position number. I have way too many positions on right now. Need to bring that back. But that's the overall market. That's how I kind of traded those two big pieces of news: Trump overcoming the COVID on Monday, coming back into the office, and the stimulus tweet on Tuesday. So what will happen this weekend? No idea. And anyone that says that they know for sure is probably lying to you. So I'm just trying to keep all the positions that I'm holding with good relative strength that are working for me, and cut the ones that I don't. Let's jump back to the agenda. Bollinger Band explanation. And then really quickly, I haven't done this in the last stream, but really quick disclaimer. I'm not a financial advisor. Anything that I say is just for you guys to start your own research. Take it as is. Nothing that I say can be used as financial advice. That said, let's take a look at Bollinger Bands and how I use it. So, what would be a good example? Maybe Zoom. Let's go. Yeah, here's one. So, Bollinger Bands. They are basically just a volatility channel for the stock. Most common one, at least what I'm most used to using, is 20-day simple moving average, and then 2 standard deviations away from that. So when the stock's going up and down, really volatile, you'll see these bands expand, and when it's getting really tight, you'll also see the bands squeezing. And a lot of people say, like, when a stock's hitting its upper Bollinger Band, it's time to sell. And that's how I traded at first, but I would notice that when I was actually picking a stock that was breaking out and it hit that Bollinger Band, if it closed above that, especially if it was a green candle, so closing above its open price, that was actually a bullish signal that it was going to keep pressing up. So instead of taking profits too quick on a stock that's showing strength, I now kind of use the opposite. So if the stock's closing above the Bollinger Band, a green candle, especially if it's closing with good increased volume, then I want to either buy more if it's like very close to the base, or created a good platform to move up, or I'm just holding on because the stock's showing strength. No reason to sell yet. I do take some profit away from a trade every time it goes through a multiple of my average gain. We'll go through that in a little bit in the September summary, but let's find one that actually broke out. No. Why am I blanking on this? AMD here, we'll scroll back a little bit. You can see the bands expand in this expansion here, but then as the stock starts trading in a tighter and tighter range, those Bollinger Bands get very, very tight, and then you start pressing above with big volume, and instead of taking price off or position off here, this is the most bullish signal that you'll get, because it's been in such a tight channel for such a long time on very, very low volume. Once you do get that breakout on volume, closing above the Bollinger Band, that's just going to keep pressing forward. Now, one thing that I do like to do is if we get a red candle outside of a Bollinger Band, especially one that is already extended from the base, the first couple right at the base, I won't take profits. But if we're at a red candle close, so the close was under the open price and it's above that upper Bollinger Band, I'll take some profits there, because we're already extended from a base. We're starting to show a little bit of weakness. Even if this is a short-term pullback on low volume, I want to lock in some profit. You never know how much it's going to pull back. And if it's a blow-off top where the stock gets euphoric, like Tesla does sometimes, where it just breaks out on high volume, keeps on pressing. Let's jump to there. So like basically like right here, I know it's not red, but it's basically red on very high volume. That can mark a short-term top. So when you see something like that, you don't have to take away your entire position, but it's smart to lock in some profit, because if you bought at a good price at the base or just breaking out of the base, you have tons of profit. You want to lock some of that in, then let the rest run. So that's how I use Bollinger Bands. Different types of traders, different durations of traders will use them differently, but that's what I found the most value in. Question from the stream: why do I use the 8-day exponential moving average? I got this question yesterday too, and someone asked, why don't you use the 9-day? Honestly, when I first started trading, my professor used the 8-day exponential moving average, and then some people that I follow on Twitter, some professional traders, also use the 8-day exponential moving average. And I found pretty good success watching a stock in an uptrend pull back to that 8-day, finding support there. So that's why I use it. I think you can use the 8, the 9, the 10, anywhere around that shorter term band. Or shorter term duration with the exponential moving average, putting a little bit more weight on the most recent days. You should find some of the basic support lines there. So 8, 9, 10. There's no exact science to it. I'm just comfortable with 8. That's what's on my chart. Instead of changing it for every different stock, I'm just trying to keep things as simple as possible. All right. So let's get to stock. Oh, didn't change that. So September results. So we did this last month for August, and since then I've uploaded kind of the Excel file that I use to summarize all these trading results, and then also documentation on if you use E-Trade. I'm not sure how other platforms will give you like all your trades, but I can export all my trades from E-Trade, make some adjustments to the data, and then I have all the formulas set up to aggregate these statistics. So if you're interested in doing that to look at your own trading statistics, check out the description in the video here. There should be an Excel file there, a Google Doc that also has documentation on how to do that. If you have any questions, leave a comment in the comment section and I'll help you out. All right, so this is September versus June 1st since I started really tracking all my trades. So September, let's just really quick jump to S&P so you get a picture of September. Here's September 1st was here, and we go through the 30th. So what did S&P do? 30th. So S&P was down 3.8-ish%, not exact, but down 3.5%, 4%. So no surprise that my long trades weren't profitable this month. A lot of trades. I definitely overtraded here because there was so much movement, so much volatility. Like, are we done with this downtrend? Is this just a quick pullback? I did take a lot of trades showing good price relativity, got stopped out of a lot of them. But overall, still, I mean, only $200 down on that. The win rate was really low, 38%. I guess that's the same as my overall. That's been a target of what I want to improve on. But I've been able to stay profitable even with that low win rate because my average win dollar amount over my average loss dollar amount, so your win-loss ratio, has been over 2. So it's been 2.26 since June, which is great. You can stay profitable by having a lower win rate because I let my winners run. In September, it wasn't exactly as hot as I would like, only 1.57. So for my average winning trade, I would make $86. On my average losing trade, lose 54. Going down here, this is the weighted average percent on a win. So because this 4.67 is higher than this 4.49, that means when I do have a winning trade, I have more than the average dollar amount on that, which means I'm putting bigger money on stocks that do well, and that's all you can ask for. For the average loss, let's see, and the flip side, which is ideal. My average loss on the long side in September was minus 3%, 3.09, but my weighted average was minus 2.85. So when I was losing smaller than the average amount. So is it ideal? No, I lost $200 on the long side in September, but given how volatile the market was, given the pullback there, not too bad. Again, in October, my goal is trying to get this win rate up. 38%, you're not gonna win enough that way, but with this lower win rate here, now my overall win is 6.8%. And that's important because when I put on a trade, I'll set a profit goal for my average win rate. So when a stock goes through 6.8% now, before it was 7.5. Now when a stock goes through 6.8%, I'm up 6.8% on a position. I'll sell 10% of that position so I can lock in profit. And then depending on where I got my entry price at, I might move my stop loss up to my entry price, locking in a winning trade. If it wasn't that pinpoint entry that I would want, I'll wait till the next multiple of my average gain. So 6.8, so that's 13.6%. So at 13.6%, I'll take another 10% of my initial position off, book that gain. I'll do that one more time at 3 times the average gain, 20.4%. So at 20.4%, I'll take that additional 10% off. So 30% of the positions now booked for profits at each of those average gains. At that point, I'll definitely use my stop loss up to my entry point and just give the stock some room to breathe. That's something that I'm still working on. One of my weaknesses, I just tweeted it out today, has been when a stock's winning for me, I like to take profit and take too much profit instead of letting it go through a minor pullback and then start running. Once it's started showing weakness, I've been too quick to cut the trade for profit there. So trying to work on that, but looking at these statistics, you'll see kind of a way to map out how you want to start selling into strength, how to book some profit. So that is the long side. From the short side, let's see. Short side was great for September. I had a couple shorts on individual stocks, Fastly and what was the other one? Fastly and Etsy I had for the individual ones. But then my major short was just QQQ through the whole thing. So was able to book $800 profit through that. Good win-loss ratio. Obviously, it was a tough month in the market, so that's expected to be pretty high. When I short stocks, it's more so to give me a hedge. It's not like I'm trying to make a ton of money shorting the stock. It's way easier to make money from the long side, but sometimes you got to get a buffer, got to give it a hedge on your P&L. So basically, all the profit that I've made since June was in September shorting wise. Average win just a little bit above the average loss on a percent basis. That's because that QQQ, I had 70% of my portfolio in that, so the weighted average is going to be kind of thrown off on that. So honestly, I probably should have excluded QQQ so we get a better read at that. I'll probably do that for next time. And then overall, was still profitable in September. So it's a bad month for the market. Didn't try to hit any home runs. $630. That's nothing, but it's not a loss, and that's great. I'll take that for a choppy month, a down month. And now I use these trading statistics to my advantage to kind of build out that way to take some profit. And always the goal is to get that win-loss ratio as high as possible, because if this is high, your win rate can be very low and you'll still be profitable. And that's easier because eventually your win rate's going to come back if you're taking good stocks. So if you can keep that win-loss, that 2.21 win-loss ratio as high as possible, you're going to start seeing profit. So that was my September results. Not great, but we made it through. Hopefully October will be better. Any questions on that? Again, leave a comment. But let's jump back to the agenda. Shoot, sorry. Okay, just technical analysis now. All right. So, got a bunch of stocks to look at from StockTwits and Twitter, so we'll just jump into them. First, we have AMGN. Let's zoom out to get a full picture. So, in an uptrend, but really starting to sell off these last couple days and on high volume. Kind of the opposite of what we were talking about with those Bollinger Bands. Now, on the downside, if this starts closing under that lower Bollinger Band, that's even more bearish for me, especially because the volume's so high. So, yeah, if you're in the stock, this gap down was ugly. Let's see what that was. 3% gap down, broke through some moving averages, basically all the moving averages. And a longer tail today, only down 1.4%. But overall, I'm going to let this kind of play out. It's only a little bit above its 200-day simple moving average. Not a stock that I would personally trade. If you're already in the stock and you held through this pullback, you can use these prior lows here. It's not a perfect line, but prior lows and that 200-day simple moving average is kind of your stop loss there. If it starts breaking under that, you're going to be pressing that lower Bollinger Band down further. You got a gap here in the chart to, let's see, 221. So that's another 5-ish% down. Let's see. Yeah, 6% down. And you're definitely not buying at this point. You're not buying in a downtrend. You're waiting to see this kind of pivot and move back up. So that's AMGN. Got one TLSA, not Tesla, but Tanzanian Life Science. Saw this random spike here. I think this actually had to do because people were buying Tesla instead of this. Maybe I'm wrong, but yeah, lately we've seen good movement. Now here's a good example. We're starting to close above that Bollinger Band on increased volume. So this is a sign of strength through here. That's 28%. If you would have sold because you were right at that upper Bollinger Band, then you would have missed out on 28 or all the way up through that high. That's 40%. Now, if you're in the stock right here, you see this large brick of a red candle here above the upper Bollinger Band. That shows that there's still some sellers at this point. I like that it came on lower volume, but still at this point, I would take some profits off and then look at this 8-day exponential moving average. If we get another pullback day, which it seems like we might with this type of handle, this type of setup, see if that holds any support for just a pullback and then to press higher. Below that's that 50-day simple moving average. This is just technical analysis. I don't know the story behind the stock. I only trade based on technical analysis. A lot easier for me to just ignore all the news and look at price and volume here. So if this is awaiting some big type of news, apologies. But that's what I'm seeing for TLSA, not Tesla. We'll go over Tesla in a little bit. APHA, I think this is a wheat stock. Those have been going this week. GrowG finally broke out. GrowG, that's what I call it. What is it actually called? Grow Generation Corp. This broke out of a very, very long and tight channel here on good volume. So a lot of the stocks in that industry took off. This one's no different. Coiled up, but broke under previous lows, which you're waiting for a break out to the upper side. So you probably wouldn't have been in this trade at this point anyway. Found some support at the 200-day simple moving average. Bounced a little bit, but still not taking this trade until we break through this point. I wasn't in this stock. I wouldn't have traded this one specifically because it's so close to that 200-day simple moving average. The relative strength here was basically flat, not really showing great relative strength, especially going into the breakout. That's a downtrend on the relative strength, not what I'm looking for. But we got big volume pressing through here. What is that up now? Closed up 30%. Got the red candle close over the Bollinger Band. Extended from that base. Probably a good time to take some profits. Let's see when earnings. 10:15 confirmed. So with earnings going next week, tough. Definitely not buying at this point. Going into earnings, I never buy the stock hoping earnings will go well. Earnings is always a flip of the coin, and I'm trying to trade with an edge. So I'll hold into earnings if I have a 10% profit. Even then, I'll probably scale some position out just to lock that in, give it some wiggle room in case it works against me. But if you're already in the stock, maybe you do hold some into earnings because you have that buffer if you entered around this price. But yeah, we'll see where this one goes. That's APHA. JD, this is one that I am in. Let's throw those trade history flags back up. Not trying to hide anything from you guys. So did try to trade this once before. Actually, I think I shorted this. Yeah, I shorted this, covered the next day. But this was perfect VCP method, volatility contraction pattern. So got that going, really tight here. And this was earnings, so I wouldn't have been holding through earnings. But it opened, pulled back, found support at that 20-day simple moving average, and then started moving up on big volume. So you could have taken the trade once it found that support and moved up through here. That would have been 23%. I unfortunately didn't catch that until it started extending past this base, but you see, closes above that Bollinger Band with volume, closing near the high of the day. Those are bullish signals of continuation. Red candle close, I probably would have taken some out there. It doesn't always, technical analysis does not always work. Nothing in trading always works. You're just trying to add probability in your favor. So I would have locked some profit in there, some profit in there, and then this time you do see some sideways movement before one more spike and then a pullback. So I took this trade, let's see, Friday, Thursday, Wednesday on this kind of like saucer and handle. So threw the candle out through there. See, we got big volume the previous day before I bought, so that kind of gave me a sign that this might start moving in my favor. So after the first 45 minutes or so, I bought at 78.63. Since then, it kind of did nothing the next day, pulled back but found support at that 8-day exponential moving average, that purple line, which is good. That's what we want. And then had higher high, higher low, close over the upper Bollinger Band today. Good volume. So I'm in this because it showed strength, pulled back, not too much from the high. Let's see, even from the most extended high to the low, 17%. That's not bad. So let's see if this can continue. Those Bollinger Bands got very, very tight, meaning volatility's been tight, ready to start expanding with big volume coming in. Let's see if this can start pressing through. I'll take 10% of the position off at each one of those multiples of my average gain that I talked about earlier. And I'm using E-Trade right here. So if you guys are interested in E-Trade, there's a link in the description below. I'll get a $50 Amazon gift card. There's a ton of different platforms that work just as well. So not trying to push that, but if you do end up getting E-Trade, please use that link. Help me out. But let's see. So yeah, that's JD. I like this trade. Haven't taken anything off yet. Let's see. A move to retest all-time highs would be another 8%. Get to lock in some profit. And because this was coiled so tightly, I could put my stop loss at my entry price and just lock in the winning trade once it starts moving there. For my stop, I'll put it below this 20-day simple moving average, below this low here. So if this trade really works against me, I'll get out with a small loss. Not too bad. That's JD.com. And let's see, Microsoft. This one is a beautiful little cup and really low handle, which is ideal from a risk-reward perspective. And we did get some follow-through up through, had the 50-day simple moving average here, this red line, as the low of the day today, and then moved up, closed at the high over the previous highs in this channel. So this is all bullish to me. The one thing holding me back, but it probably isn't actually true, is the lower volume today. Downside with E-Trade is they're a little bit slow to update the after hours volume. So this could be on higher volume, in which case close over that upper Bollinger Band, close at the high of the day, cup and handle. Let's see if volume was actually strong there. This is all bullish through here. So if you're in the stock, great one to ride. Let's see if this pressed to all-time highs. That's an 8% move higher. That's Microsoft MSFT. MSFT. And that's all I had from StockTwits and Twitter. So I see in the comment section here we got Apple. And similar chart. A lot of these bigger stocks are on the same type of chart, but a little bit lower price relativity than I would have expected. And not too much going on here, but also not bearish at this point. It's above the 20-day simple moving average, closed above that 50, and that 8-day exponential moving average is lower than the kind of cup's top here. So we haven't broken out yet. That means if you're looking at a stock, if you're looking to kind of buy in, you can use the high of that day as your buy point, because remember, we always want to buy into strength, buy when a stock is showing strength, not when it's showing weakness, because who knows how long it can show weakness for. But breakthrough here, you got plenty of room up to all-time highs, 18% there. On the downside, use that 20-day simple moving average or the lows of some of these days. Let's see, 111 as your stop loss. You always want to put your stop losses just below some lows and moving averages. A lot of times you'll see a stock pull down, hit that moving average, then bounce back. So you don't want to have your stop there. You want to put that stop a little bit lower so it gets triggered only truly if the stock's breaking the pattern that you were trying to trade. So that's Apple. And then we got a couple that I wanted to run through. CHWY today. CHWY was great. Why didn't I have all these lines drawn previously? There we go. All right, so CHWY, I've tried to trade before, bought some, sold way too early because look at this move, so that sucked. But came back down, and then using the previous resistance point coming through here and the high of the day here, I set a buy order to buy if it breaks over that. So yesterday, with increased buying volume, I bought at 59.22. Today we just had a very clean break through that resistance on decent volume, probably a little bit higher than that too. Higher high, higher low, close over that constricted Bollinger Band. Everything I'm looking for a stock. Wish I had more money in this, but because I've been over trading a little bit, I have too many positions open to do that. But that's CHWY, looking great. Let's see, a retest of kind of midway through this high is 20%. Not out of the question. Looking good so far. What is that? CHWY. CMBM. This is one, again, that I traded before on this little ledge here. Showed great breakout strength. I actually bought as it pulled back and bounced off that 8-day exponential moving average here. Sold some into strength and pulling this down. Sold some more into strength and then got stopped out when it started collapsing here. Since that collapse, it's getting that VCP method. Really, really tight pattern. Very, very tight volume. Right at that 8-day exponential moving average. I bought here at 17.23 when it broke over the previous day's high. Might have been a little bit early, but we've seen some strength here. Today it tested the round number of $18 and was, let's see, 18 over 17.23. I think that's like 6%. Because it was moving up with such little volume, I did take 10%, actually I think 20% of the trade off at that point, because I'm trying to take some positions off. So if this isn't going to work for me, I wanted to take some profit while I could. So probably sitting at about 80% of my initial position here. Still coiled nicely, so I mean it's not perfect, but had some kind of tests over that line, got pressed back down, still over that 8-day exponential moving average. Something to look at. This does trade on very, very light volume though, so definitely not one you're trading with heavy capital. That's CMBM. The rocket ship this week, CRDF. This one was basically textbook breakout. We saw you're never going to catch that first one. I missed the second as well, the second pullback as well. But let's see, broke out 92%, pulled back from the highs 14, found support right around that 8-day. So maybe if you're using a 7-day or whatever, you're hitting that 5-day. It's right there. But then broke out again over the previous high, went all the way. That's another 38% move higher. Clean some of those guys out. So at this point, I found this, put it on my watch list, started watching it pull back on lower volume. You always want the pullbacks on low volume. Low volume, right to that 8-day exponential moving average. I did like a really low cheat there. I think I actually bought, let's see, 1352. So I bought when it broke over the previous day's high here, thinking, all right, we've found a low point. We're going to start bouncing. Did not get that. Moved right back under the 8-day. And then this was Tuesday. So when the Trump tweet went out, I did take some position size off, which I chose the wrong stock to do so, because the next day this kind of just had a fine day, very, very low volume, but just kind of sat there. And then on Thursday, this gapped up at the open, pulled back a little bit, hit that 8-day exponential moving average, and then just took off. So from, I think this was a plus 28% day. Yeah, 28%, monster move. I sold some into strength here. Let's see, at 1505, 1630, 1740. And then I got some off pre-market today at 1840. Just a very small amount though. And this is holding up super, super well. Very high tight flag. Maybe we move sideways here before another leg up, or we pull back down to that quickly rising 8-day exponential moving average. But this is one that, if I'm going to go from being a consistently good trader to a consistently great trader, is something where I need to put big capital on these stocks that have really strong breakout potential. I've always been a little skittish with that, where, oh, this has like so much volatility. I don't want to risk too much capital if it goes and quickly hits my stop loss. And that's where I could say, Nick, you can use a bracket stop loss. You can put some at 3% and then more at 8%, giving you more wiggle room to stay in the stock, which would have allowed me to put more capital on this trade and gotten 30% back on it in one day, and then sold more in pre-market today. So it's a great chart to look at. This is going to be a really important takeaway from me. I'm going to get more aggressive with these types of plays, put more capital in, and hopefully make money on these true breakouts. I'm not looking at selling the rest. I want to really hold on to this because it's looking strong in a strong uptrend. At this point, one of the things that I've been doing wrong has been selling too early into strength the rest of my position, the second it starts showing a red day or whatever. So I'm going to give this some room to run, but monster move, learn the setup, breakout on high volume, 90%. Look at how small the volume was on those pullbacks. The strength's all there. Does it again. Very, very low volume. That's what you're looking for in a bull flag. And this broke really well. That's CRDF. Got CRM, Salesforce. Tried to take the trade in this high tight flag and got stopped out when we broke through here. Kept it on my watch list, and then created this round bottom we have here. Maybe you could say there's a little head and shoulders inverted pattern, but what I was looking at was from this high point through here, a little support or little resistance area. So my buy order was breaking through that. I think I might have gotten, let's see, 22.53.42. Yeah, so I used the previous day's high here, so even got a little bit more aggressive on that, got in around there. Then just immediately went red on me, but found support at that 8-day exponential moving average. The next day, good move with decent volume, but closed above that upper Bollinger Band. Second day after a red candle, but is not at my profit-taking level, so didn't do anything. Today we got a green candle, closed right at the high. And how that's squeezed with this type of earnings break, so that was 26%. This looks strong, ready to go. Happy I'm in it. Wish I had more on it. Let's go. I got three that haven't truly broke out yet, but I've already gotten in. First one's NEO. This one you can see I've been trying to trade a lot, but does a very similar pattern. Breaks out high volume, then just wiggles on very light volume. Breaks out high volume through here, then starts to wiggle on light volume. Breaks out heavy volume. Now this has gotten really tight through here. I drew that downward resistance there. Bought in on Wednesday. Thursday gapped up at the open. Couldn't hold that. Kind of pressed down. Still needs a couple days, and I don't love this pattern of higher volume on red days, even though it is like lighter volume. Wish those were inverted. But as that 8-day exponential moving average comes up to provide support, I'm not too concerned about this. I have my stop under there to really get me out if the trade starts working against me. But let's see if this can break out shortly. That's NIO. Let's go NVAX. We talked about this on Wednesday during the live stream. Don't fail me now. Come on. All right, 1 second. Let me restart that. We were talking about NVAX. So this one has had that monster move up. What is that? 720%. It's pulled down from the highs. You can see I was shorting this all the way through this downtrend. That pullback was 57%, so a little bit aggressive of a pullback than what I usually like to get back in going long a stock. Oops. Shoot, sorry about that. But has now created that nice volatility contraction pattern that we're learning. So resistance at that 50-day simple moving average after this move up, pulled back, found some support at that 20-day. That's starting to turn up. You have the 8-day just underneath there. I drew a downward trend there. So bought when it went over. Well, I bought about 45 minutes into the day on Thursday. So about 112. Let's see. Yeah, $112. Today we got a higher high, higher low, but closed right at the low of the day. Still above those moving averages though. So still one to get in if you're looking at if you're looking to buy any more going into next week. Break over Friday's high of 115.60. That would show some strength, but then we do have that 50-day simple moving average as resistance through there at about 120.50. But if we can clear that, then it's got really, really quick room to move. So let's see. Has been coiling up since September 16th, so about a month on that. Really tight pattern here. I like it going long. And then finally, something that we've talked about before, PEIX. Traded this. This was probably my best trade so far this year. Went from 530, kind of bounced around in here, and then I bought on this breakout of this downtrend here, or this diagonal resistance. So bought it 428, and then just started selling into strength. I sold way too early, and as you can see, green candle close over the upper Bollinger Band, extending from a contracted pattern. There was no reason I should have been selling at that point. That was foolish, but I was able to get out of the rest, basically at the high, just before that red candle close. And here we go. Red candle close over the upper Bollinger Band. After it's fully extended, that was a 62% run from the base. That's where you want to start taking profit. We got a low volume pullback to that 8-day exponential moving average. Wasn't involved in that. I was out of town for this pop here, but you could have bought there. But then I saw this through here and bought when it broke over that. So let's kind of pull this down. I bought at average of 806. Have sold some, just that quick 10% of the position into strength here. But now it's doing very similar to what it did at the $5 range. Let me throw these flags off so it's clear, more clear. So similar to what it did at $5 here, right? It broke high of day 509, high of day 505, high of day 514, but was a red day. And then it started really breaking out on big volume. So how does that look for the $9 barrier? We broke it 902, high of day 915, 919, little pullback today 908, lowest volume so far. So on Monday, if we can break over the past high of 919, I'm going to actually be adding position onto this because I want to be in as it breaks towards $10. If it doesn't and starts breaking down, I will take some of my position off at my entry at 806, but I do want to give it some room to run. I guess that 8 days at 820. I'll think about that this weekend. Probably will get stopped out at my stop loss at my entry point of 806 if it pulls back. Maybe even through here. Just give it a little bit more room to run at 790. But this looks primed to go, so put this on your watch list. Let's see if we can get that volume coming back in and another press higher. All right, so I do have two others that I want to talk about, but I see in the comment section we have STKL, so let's get to that one. Synopta Inc. First time I've heard of the stock, so again, don't know the fundamentals behind it, anything like that. But obviously in a very strong uptrend. Oh man, beautiful pattern. Wish I would have gotten this earlier, but you can see through here there was a couple head fakes over this. So you might buy, get stopped out through here or whatever, but very, very tight pattern through here and has now started trickling up, but on very light volume. So ideally, when you get that breakout, you get it with a lot of volume. The more volume at the initial breakout point over a trading channel, the less likely it is to pull back to the channel. So in a strong uptrend, let's see what it is from the base now, up 6%. Not moving anything crazy, but that's because volume's so light. 8-day exponential moving average has held really well support through there. So if you're in the stock currently and it breaks under the low from Friday, maybe you take some of the position off because we might be retesting this channel here. But if you do see a spike on volume that actually holds towards the high of the day, that's another time to start adding position size too, because this has gone from, let's see, from March's high, 163%. So in a very strong uptrend. Let's see how this works. I'm going to throw this on my watch list to keep an eye on. Thanks, Isaac, for pointing that out. If that's all you guys have, let's go just through two more. We have Tesla. Has not broken out cleanly yet, but let me throw, and I'll just leave my buy flags out. Have traded this multiple times throughout the year, but is forming that nice volatility contraction pattern, getting very, very tight in this range, while the 20-day simple moving average, 8-day exponential moving average provides support. I bought on the break over the high here. And then the next day gapped up. So I'm thinking, all right, perfect buy. Here we go, Nick. But unfortunately pulled back down through the rest of the day. Still held over those converging moving averages. Today was an inside day on a little volume so far. Again, we'll check after hours next week, or in the weekend. But inside day, kind of breaking out of that downtrend, diagonal resistance. I keep on messing that up. But this looks set to go. So what I'm looking for is a test of all-time highs. That'd be 17%. I would definitely take some position size off there. Ideally, if we get even another couple days of sideways movement, not likely, but if we do, then we get the Bollinger Bands even contracting tighter, which will make that breakout even stronger. So that's Tesla. Really, really constructive pattern here. When things get really tight like this, there is a likelihood that it breaks to the downside. At this point, because it was in a consistent uptrend, I'll stick with that uptrend as the likelihood of what direction it chooses, but it could break down. If it does, stop loss under some of these previous lows at 403. I'll probably do a split or a bracket stop loss to get some out a little bit earlier and then the rest out under here, give it a little bit more wiggle room. But looks great, hasn't broken out. You can use Thursday's high as your breakout point if you're trying to buy more. So that's Tesla, TSLA. And finally, Zoom, very similar story. Has been in a monster uptrend and has really just lulled traders to sleep as it just gently moves across that 8-day exponential moving average. And then today we opened up, got increase in buying volume, higher high, higher low, kind of broke out of this downward diagonal. I'm in here with 10% of my portfolio, which is a pretty sizable position. So trying to really get a good hit here. A move from the current price up to all-time highs, 7%. But chances are this goes even past that if we get going. On the downside, I'll probably use another bracket, put one at 470, one below the 20-day simple moving average in some of these lows just to give it that extra wiggle room at 456. That'll give it plenty of room to say, Nick, actually, this isn't going to work out for you. So get out while you can. So that is Zoom. Got another question about PEIX, so let's jump to that. Why does the downward diagonal showing lower highs signify breakout? Yeah, so with that, basically it's just giving you your best risk reward on a trade, because the tighter that trading channel gets, I'm not sure what direction that's, let me just throw it on the screen. The tighter this trading channel got, the easier it was for me to put a position on where I can use bracket stop losses and be below multiple types of moving averages. So at 428 when I bought, let me just get that up. So when I used this downward at 428, I was right on the 20-day simple moving average and the 8-day exponential moving average. I could use a stop loss of 5% and still clear well under those and the lows. So it gave the best risk reward. If you're using a flat kind of support line or resistance line, most of the times that's going to happen in a cup and handle. And if that happens, it's already a little bit extended away from that 8-day exponential moving average. And that's not necessarily a bad thing. I'll go through another stock after this that shows that. But anything that you can use to get the lowest price at a good risk reward is ideal, because it just gives the stock a little bit more room to wiggle around before you get stopped out. If you're waiting for a true break over, say you were using this high as a buy point, that's 471. It broke through that, but then it pulled back. I mean, this one was really strong the entire way, but like by buying at 471 versus 428, the stock has to immediately work in your favor to keep you in the trade. If there's any pullback, you're already kind of extended from that 8-day, so you'll likely be stopped out if you're using a 5 to 8% stop loss on the entry. Let me know if that helps. In the meantime, Datadog, DDOG, we talked about on StockTwits today. Had a great breakout on huge volume. Let's see, that closed at 13% that day, but went all the way up to 18%. Missed that breakout, but then it started kind of moving sideways, volume getting lighter, pulled back down to that 8-day exponential moving average. You could have used that downward diagonal here to get a really nice entry where the 8-day exponential moving average was within like 1%, maybe 2% from your entry there. And today we got a breakout on big volume, closed right at that upper Bollinger Band. Because this move came on so much volume and the kind of follow through did as well, that's looking good to go here. And one last one I want you guys to throw on your watch list, not that, CLDX. Can't type today. This is one. Let me throw on the events trade history. So you can see this is one where kept on buying the breakout, kept on getting stopped out shortly after, and was away when it broke out, but got this downward diagonal, allowing me to get a good low risk entry here, and pull back again to that 8-day exponential moving average, but let me zoom in here so you get the volume. Breakout, huge volume, pull back, light volume, support at 8-day, 9-day, 10-day, whatever you use. Next day, basically higher high, or well, higher low, so nothing to frighten me out there, and then really broke out with size. And now it's doing the same thing. Yesterday it was down like 7%. Today it was basically flat. Volume very low. Another day or so, this 8-day moves up. Maybe this moves sideways, and you get exactly the same pattern going through here. So I sold out here, and am putting it back on my watch list if we can get that one more day of sideways movement or kind of pull back to the 8-day exponential moving average. Even if it doesn't, if volume comes and presses this over the high, zooming way out here, there's this large gap in the chart, and let's see what that. The low of that is 33.75. So this is only 17.13 right now. It's got plenty of room to move up to close that gap. That would be a 90% move. So a lot of power in this play. Really likes to pull back on low volume, giving us ideal entries. Let's keep this on the watch list. Could really pay out for us. All right, so that is all I had. Make sure you follow me on StockTwits and Twitter. On StockTwits, I post multiple times a day, go through all of the stocks that I'm watching. You can see all the stocks that I'm currently trading if you go on your laptop on StockTwits and then click to my watch list. Everything on my watch list is what I have some position on. On Twitter, that's Stock Trick Nick, not StockTwits, Stock Tricks with Nick, a little bit shortened there. But yeah, if you guys watch the stream and find value from this, please subscribe. Really helps me out, helps the algorithm. The more subscribers I have, the more this pushes the video out to people, and the quicker I can start doing this full time. So help me out. Leave a like, leave a comment, and good luck trading. See you next week.